They owned the house for 22 years, paid it off, never missed a single insurance payment. Then, in 6 weeks, they lost it completely. And the insurance company didn't pay a cent. Not because of what happened to the house, because of where they were standing when it happened. This is a true-to-life composite case. Names and identifying details changed, based on patterns that happen far more often than most homeowners realize. Let's open the file. Let's call them Maria and Robert. Married 31 years, 2 grown kids, 1 paid-off house in a quiet suburban neighborhood they'd lived in since their 20s. Like most homeowners, they carried a standard homeowner's insurance policy, the kind that covers fire, water damage, theft, the basics. They renewed it every year without really reading it. Most people do the same thing. Then Robert had a stroke. Nothing that ended his life. But recovery meant months at a specialized rehabilitation facility 2 states away, near their daughter, where Maria could stay close and help him recover. They locked up the house, set the thermostat low to save on bills, and left. They fully intended to be gone 6, maybe 8 weeks. Recovery took longer than expected. 8 weeks became 12. 12 became 5 months. The house sat there, locked, untouched, exactly as they'd left it, paid for, insured, and, as far as Maria and Robert knew, completely protected the entire time. In month 4, a pipe fitting failed in an upstairs bathroom. With no one home to notice, water ran for days, maybe longer. By the time a neighbor noticed water stains on the siding and called Maria, the damage had spread through 2 floors. Warped hardwood, ruined drywall, mold creeping up the walls. Maria filed the claim the same day, still splitting her time between the hospital and now, apparently, a ruined house. The estimate came back at just under $190,000 in damage. She expected it to be difficult. She didn't expect what came next. 3 weeks later, a letter arrived. Claim denied. In full. Not partially reduced. Not under review. Fully denied. The reason listed was 4 words long. Property, vacancy exclusion applies. Here's the loophole almost no homeowner knows exists. Most standard homeowners' policies contain something called a vacancy clause. If a home sits unoccupied for a continuous period, typically 30 to 60 days, depending on the insurer, the policy's coverage can automatically reduce, or in some cases, void entirely for certain types of damage. Insurers see an empty house as a higher risk. Nobody's there to catch a leak, stop a break-in, or notice a fire starting. So the fine print shifts the risk back onto you. Maria and Robert's house had been empty for over 4 months when the pipe failed, well past even the strictest 60-day threshold. Under the vacancy clause buried in page 9 of their policy, water damage specifically was one of the excluded categories once a home crosses that line. Theft and fire remained partially covered. Water damage did not. Their $190,000 claim, $0 paid. Here's what makes this especially brutal. Most insurers don't proactively warn you when your home crosses into vacancy territory. There's no automatic phone call, no email alert saying your coverage just changed. The responsibility sits entirely on the policyholder to know the clause exists and to act on it. Usually by purchasing a separate, inexpensive add-on called vacant home insurance the moment they know they'll be away. The frustrating part is what it would have taken to stay covered. A vacant home rider, an inexpensive add-on many insurers offer for exactly this situation, often costs a small fraction of the annual premium. If Maria and Robert had called their agent the week they knew Robert's recovery would run long, this entire situation could have been avoided for the cost of a few dinners out. Nobody told them that add-on existed. Nobody asked why their house might be empty. The system simply waited for the 30 or 60-day line to be crossed. Vacancy clauses are just one of several quiet exclusions built into standard homeowners' policies. Flood damage is almost never covered by a standard policy. It requires separate flood insurance entirely. Gradual damage, classified as wear and tear or neglect, is typically excluded too. None of these are secret, exactly. They're just written in language most people skim past on renewal day, year after year, without ever expecting to need them. This clause doesn't just affect medical situations like Maria and Robert's. It quietly applies to inherited homes sitting empty during probate, seasonal homes left vacant off-season, extended work relocations, and military deployments. If you can picture a set of house keys sitting untouched for a month or two, this clause is worth checking. So here's what actually matters. 1. Find your policy's vacancy clause and check the exact day threshold. It's usually 30 or 60 days, and it's almost always in the exclusion section. 2. If you know a property will sit empty longer than that, call your insurer before you leave. not after something happens, and ask specifically about a vacant home rider. 3. This applies to more situations than you'd think. Hospital stays, inherited property, seasonal homes, deployments, even long vacations in rare cases with stricter insurers. It's worth a 5-minute call to confirm your own threshold. Maria and Robert are rebuilding, slowly, without the insurance payout they spent 31 years assuming would be there if they ever needed it. Their story isn't rare. It's just rarely explained clearly, until the letter arrives. Exclusion-based denials like this make up a meaningful share of homeowners' claim disputes every year, and vacancy is one of the least understood among them. This channel exists to read the fine print so you don't find out the hard way. The clauses insurance companies bury on page 9, and the 5-minute calls that could have changed everything. If this helped, subscribing means the next case file lands in front of you before you need it, not after. Next time, the 3 words that can void your health insurance claim before you even file it, and why almost nobody reads their policy closely enough to catch them. See you there.